Big moves yesterday in the market. Before we start, have a look in the description box below because I've got links to my free 5-day challenge if you want to work on your trading psychology to improve your results, and also a link to my free Telegram group where I do regularly post analysis and videos for those of you who are not subscribed. And if you are not subscribed, you are really missing out. I've also posted a link below for you to subscribe to my daily Forex signals service. On Tuesday, we had the release of the US CPI number. It gained 3.1% versus the 2.9% estimated growth. So it was above expectations. 0.3% rise on the month versus 0.2 expected. Global stock market indexes dropped. The US 10-year treasury yield hit a 2.5-month high, and the dollar touched a 3-month peak against the yen on Tuesday after the US inflation data slowed less than expected in January. After the data, expectations rose that the Fed will likely not cut interest rates until its June meeting. All three major US stock markets fell more than 1% each. Dow Jones Industrial Average posted its biggest daily percentage drop in almost 11 months. The yield on the benchmark 10-year Treasury note rose 14 basis points to 4.31%, its highest level since December the 1st. Also, gold prices fell below the key $2,000 per ounce level, and the dollar index soared 100 pips to 104.90. Also due out this week, we have US retail sales and the US producer prices report, which will give a further indication on inflationary pressures and the strength of the economy. Don't forget, last week we had the US non-farm payroll and employment numbers out showing very strong employment growth. So it's clear the US economy is strong. Inflation is not weakening as quickly as hoped. Interest rates are unlikely to come down as quickly as we thought maybe a month or two ago. And the dollar is soaring. Let's have a look at that dollar. I had been talking about the dollar continuing higher. Unfortunately, we had a long period of consolidation for well over a week. Really irritating, because it wasn't until we got that CPI release that the dollar pushed up, and I got the move that I had been expecting. But it's really frustrating because we're sitting around waiting for data to be released, and it's not until the data is released that we get the move that I'm expecting. And of course, running positions over the release of these numbers is not something that I recommend because it is high risk. We don't know what the numbers will be. But then maybe sometimes you have to run positions over these numbers in order to actually capitalize on the move that I'm expecting. Well, it's very clear to see that the dollar's in a bull trend. We know why. The fundamentals are strong. Higher rates for longer seems to be the theme as we start the new year. I talked about this descending triangle in my last video. I said that normally that is a bearish pattern, but in this case, I thought we would break above it and shoot up. And of course, we've done that. Now, if you did run long dollar positions over the number, you've done extremely well. The video before last, I said that I was getting us into long dollar positions. So, you know, what I'm predicting is right. It's just a shame that we have to wait for numbers to actually trigger the moves in the market. That was the hourly chart for the dollar index. This is the daily chart for the dollar index, which is still a confusing mess, very much in a sideways pattern. So the only thing I can really do is look at the short-term charts to get some sort of idea of where we are going over the next few days. I do think that the US dollar will continue to push higher, as I have been predicting for quite a while now. Now, on that note, gold collapsed. I had a sell level yesterday at 2023, 2026, stops above 2029. We only got to 2029, so we didn't break above that level, and therefore the stops were not triggered. Now, if you were brave enough to run that short position over the number, you've done extremely well because the market dropped 40 points from that 2029 peak down to 1989. And I do think there's probably further weakness for gold into the end of the week. We've broken below two important support levels from these two trend lines. We're testing the 100-day moving average, and it has worked as support and resistance levels quite well in recent months. Good support level there for the blue 100-day moving average, good resistance, good support down here. So there is a chance that it will hold, and there is a chance that it will bounce back. But I think sooner rather than later, gold will break down below that 1989 area and probably head down towards the 200-day moving average, which is around 1970, 1965. Silver here, we had a sell level at 22.70, 22.90, and 93 was the high. And of course, silver collapsed. So again, if you did run that short position over the release of the number, if you were brave enough, really significant profit. The market dropped so quickly. The market dropped so quickly that you wouldn't have had time to take a profit until we got down into the low $22 area. Have a quick run through what I had on the trade sheet yesterday. So we had New Zealand dollar yen buy level at 90.85, 90.75. Where did we get to? We got to 90.84. If you did manage to get into a long position at that level, admittedly, you'd have had to have bought it at the upper level of that buy level band, but you certainly did very well. 91.20, 91.50 was our target. Where did we get to? We didn't quite get to 91.50, 91.48. We got pretty close, but maybe we can continue higher today. I wanted to buy the dollar versus the yen, but we never got down low enough for me to buy it before the release of the CPI number. And then, of course, the dollar soared against the yen. We're up through 150 now. So never mind, right idea. We just didn't get the opportunity. I did have a buy level for the New Zealand dollar yen before the number yesterday. That didn't work. Very small loss, 15, 20 pips maybe. So not really a problem. And it was certainly made up for by the Aussie dollar, which I'll show you now. Again, if you were running these positions over the number, the Aussie dollar got to 65.33. My sell level was at 65.20, 65.40. So bang in the middle of my sell level. And of course, the short worked really well as the market plunged down as far as 64.40. Not quite as far as my 64.20 target yet, but I do think we will get there. So if you still have the short position on, you could be looking at 100 pips on there. You're already looking at around 80 pips profit on that trade. The dollar CAD, I wanted to buy it on any weakness. We didn't get the weakness, unfortunately. It looks like the low yesterday was 134.37. My buy level was 134.20, so we just didn't get close enough. Shorting the euro yen did not work. Small loss, 15, 20 pip loss. Was worth a try, but I do always keep my stops tight. Now, the euro versus the US dollar. The day before, this trade was stopped, but if you managed to trade it yesterday, the high was 107.94. My sell level was 107.80, 107.90. So just 4 pips above the sell level. And then the market did collapse. As you know, I've been wanting to be short the euro versus the US dollar just to take advantage of the 1 month bear trend. Good resistance level, as I talked about in my last video, around 107.80, 107.90. Trend line, previous swing highs, swing lows, Fibonacci level there as well. Anyway, the resistance level worked, the market plunged, and when you look at the daily chart, I think we're going to see further downside. As you know, I do think the dollar will continue to climb, and I don't see anything to indicate that the euro is about to reverse and go higher. Not yet. I think we could fall as far as 106.30, 106.10. So we've probably got another 100 pips to the downside. So if you're running a short position, you might decide to keep hold of at least part of that position and see if we can get another 50 or even 100 pips profit on the trade. I wanted to buy the pound versus the Canadian dollar down at 169.40. Unfortunately, it never quite got there. The low the day before was a few pips above it. You can see I've got trend lines and moving averages there acting as a support level. We got there on Friday, but you would have had to have run the position over the weekend in order to capitalize on the move. Okay, so that's just a summary of the trades that we had on our sheet yesterday. I hope that's helpful. Please do ask any questions in the comments box.